Hey, today we're going to talk about a phenomenal tool that I have access to from MBS Highway. It's called an investment property analyzer. And this is a wonderful tool that I'm going to show you here in just a few minutes and walk you through kind of a hypothetical example of two financial analytics that investors use to evaluate real estate. One's cash on cash and the other is the total return on the investment. They're two different metrics that can be used to evaluate the strength of a potential investment property. Believe it or not, a lot of the conversations I'm having right now with potential buyers and real estate agents and even some sellers is about investment properties. And I suppose that's a little counterintuitive because people are saying, well, interest rates are so high. And trust me, the last month and a half has been brutal in the real estate market from an interest rate perspective. But why would you invest in real estate when interest rates are so high? Well, the answer is pretty simple. What we have to understand, is that interest rates and the price of homes are not mutually exclusive. They're very much connected with each other. And there's a lot of pent-up demand right now. There's a lot of demand for homes in the United States, and candidly, there just is not any supply. And a lot of that can be attributed to the fact that potential sellers are just sitting in the sidelines because they don't want to sell and trade an inexpensive mortgage or a rate for a higher interest rate. And that's a different conversation for a different day. I'm not sure that's such a great idea, but that's really where the market's at. So these investors are realizing, look, when interest rates come down, and oh, by the way, they're coming down. I can't tell you when, and I can't tell you how much, but if you look at the metrics in the industry right now, interest rates are going to come down. That's just going to happen. But these investors are understanding as soon as interest rates come down, prices are going to go up. And why are prices going to go up? Because there's just not enough inventory and there's a ton of demand. So these sellers are going to start coming out into the market. They're going to come into play. And even with the volumes that we hope to generate with the sellers coming into the market, it's still not going to match the demand and prices will go up, much like we saw towards the end of COVID. So I'm having a lot of conversations about investment properties. And this investment property analyzer tool, let me run through it for you here real quick. When you look at the tool, I've made a hypothetical example here on this tool. And I want to be clear about one thing. I'm using an interest rate of 7.5%. In no way am I suggesting that 7.5% is a real interest rate that exists in the market today. This is late September 2023. I don't know when anybody's going to be watching this video, so I'm not offering 7.5%, nor am I saying 7.5% is available in the market today, but it's a good place to start for this hypothetical example. Okay, so what the analyzer is going to do is the first thing it's going to look at our cash flow in year one, and then we can pick up any time from years 1 through 10, and 10 being how long are you going to hold the property. So let's say, for example, you're going to hold this property for 10 years. So that's the example I'm using. So it's going to show the cumulative cash flow from years 1 through 10. And when I say cash flow, it's going to take the rents. But then, as you can see on this tool, we're looking at principal, interest, property tax, maintenance, repairs, HOA fees, and property management fee, if any. And so I've tried to use somewhat of a realistic example here. We're estimating in this example, I think a 3% rent increase per year, and I think it's a 1% increase in property taxes, things of that nature. And then you get what the cumulative cash on cash return is. So in this example, you're looking in years 5 through 10 of being cash flow positive through the year, and you can see that you're going to get a compounded return, a cumulative return of about 10.5% over 10 years in this hypothetical example. I think this is a $500,000 home with 20 or 25% down. Okay. Let's talk about the total return on investment because this is important. So where this is a little bit different is we're going to bring in the total return on investment. We're going to bring into our cash flows appreciation. And that's really important. So for this particular analyzer tool, I can go down to the zip code. So I'm using 80108, which is in Douglas County, Colorado. And MBS Highway tells me historically it's about 4.53% appreciation. That's a historical average, and it's also conservative based on what the forecast is. So I'm going the conservative route, 4.5% appreciation. Well, in that case, we can look at what the house costs today, what the appreciation would be in 10 years, and you see we would get a gross appreciation, gross revenue over 10 years of just over $743,000, almost $750,000. We put the expenses against it, as you can see, gives us a profit number, and then we look at back out the original investment, and you realize that in this particular example, you're going to make a profit of $294,130. Your initial investment, including $20,000 I put in for potential improvements before you rent the house, so it's $145. You're getting a compounded average rate of return of 11.7%. It's a wonderful tool. So look, if you're thinking about investing, and oh, by the way, if you own real estate right now, you are a real estate investor, even if it's a primary residence, and you want to talk about how do we leverage that into legacy wealth, into generational wealth, here is a phenomenal tool that you can use. Just contact me. If you're in Texas, Colorado, or Florida, contact me. I'm more than happy to walk through with you how this tool works and how you can use it in your planning. All right, thanks for checking out my content online. I appreciate it. Would love to chat with you, and I hope you have a great finish to 2024.